Good afternoon, everybody, and thank you for joining me today. So a lot of people have come to me and asked me, Stevie, I know in your live channel each and every day, you're looking at equities, ETFs, Forex, futures, index futures, commodity futures, and a lot of you are asking me a lot of questions regarding futures. So the first thing, everybody's like, well, I never traded a future before, and I'm like kind of hesitant, I'm a little scared. There's no reason to be scared trading futures. If you're trading stocks, options, Bitcoin, it doesn't make a difference. It's just understanding the asset. And that's why I decided to do this webinar. This webinar really, for me, I feel can help change your life, have a different perspective on trading futures. Now, there's so much to learn. That's why this webinar has got so much content in it. And the ability to learn what's going on in the webinar, in this webinar, is strictly the amount of information. So if we're leaning a ladder against a house and we got to take the first step, we don't take 30 steps, run, and then jump and get on the ladder and get to the 7th or 8th step. You got to do baby steps. You got to learn, right? And so as we proceed, the next slide is really, really important, because what we really need to focus on here now is when you're trading futures, right, that it is an asset that has a lot of, advantages too. For example, you don't need to have the $25,000 day trading rule. You can trade micros, you can trade E-mini contracts, and we'll get into that. But first, you got to simulate paper trade, especially if you're a beginner. The leverage is there, the margin is there, right? The tax consequences are better trading futures if you gain on gains versus if you had gains in equities. So there's a lot of things here. And that's why it's been overwhelming for me that so many people have come to me and said, please, 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 we need to learn this. A lot of people get fearful trading futures because they just don't understand it. But if you do the time, you do the work, you put the time in, do the time. If you put the work in, right, you'll really fully understand it, right? So what we look at is index futures, right? We look at like the S&P 500, the NASDAQ futures. We look at gold, we look at oil, we look at financial futures like the 30-year bond futures. So the futures contracts trade pretty much 24 hours a day, where the underlying stocks trade 6.5 hours a day, if you're not counting pre-market data or not. But what you really need to understand truthfully is that when you look at the markets in a whole, right, it's really about one thing: being consistent, understanding the strategies. So everything that we teach in our live channel each and every day just falls into the same category of trading, whether it's an asset of a future, or if an asset of a stock, or an asset of a foreign exchange type product. Doesn't make a difference. But this webinar is really about understanding the futures markets and the different components of the markets. So let's go to the next, our first slide of the day. And why I started off with this slide is because it's really, really important. This ladder system is the ability to put orders in as you're trading, right? And if you're simulated trading, you would get the same type of product. You would get the same type of a ladder where you'd be able to get the buys and the sells. So here is the price action. Here are the bids and offers. So right now you can see the bid is 38 3/4 and the offer is 39. So if you wanted to put bids in, you go click, 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 and you put your stop in. And it's a way of, you can put in how many lots you want to buy, and everything is defined on here. Now, if you go to the internet and you Google a trading ladder in live mode, you can see how they really, really work. Now, when you're trading futures, this is the only way to put orders in a price ladder, okay? And you can see all the definitions here with the key components, right? Now, this is a system called TT, one of the best out there. But whether it's TradeStation, Sigma 360, Optimus Flow, Thinkorswim, E-Trade, they're all going to have some component of a ladder. And the ladder system, again, gives you the ability to put your bids in and or offers. So let's say you put a bid here, you put a bid here, and you got filled, and you put your stop order here, and next thing you know, it's trading up, and you go click, click, and you put offers up if you sold, and you can actually keep raising your stops. So it gives you the ability. That's why we have a term in our live channel each and every day. When you're establishing a position, hand on the mouse. That's right. Your right hand or left hand is always on the mouse as you're clicking, putting orders in, and you're getting filled, or you're canceling, you're putting your stop order in, and then next thing you know, as it's trading, you put your offers in. The offers, the sells on the left, whether you're exiting longs or entering short positions. The longs are, you're looking to go long, outright long, or you're looking to buy to cover a short. So the ladder system really is amazing. Now you have, you still have ladder systems like TradeStation has it for stocks, and other firms as well. The days of typing orders in are over. You can't type an order in for S&P futures or NASDAQ futures. It's just really too fast. So this this price ladder system really gives the end user, sorry, my allergies, the end user the ability to really look at the markets in a way that give the markets such a phenomenal opportunity for the individual for speed. Because when you trade, especially futures markets, whether you're scalp, day trading, or pretty much you need this type of functionality of this price ladder in order to be great. Okay, so again, there are videos on this on Google. I wanted to put this as the primary first screen because when you start trading, okay, on a simulator, you're going to get a price ladder with live market data. And then you're going to be practicing putting orders in, scaling out, putting orders up, etc. Just using this functionality because you need to really get it down right before you even place your first real life trade, even if you jump to a micro, which is, the smaller denomination. The CME decided to go to a micro contract because so many people want simulators. A lot of people were scared to go from a simulator to the big S&P futures contract. They decided to implement a micro type of a component of a product. Okay. The next slide here is really super important again. And again, when there's a difference between averaging down and scaling in. Averaging down is the story. My first trade ever, I bought an option at 2 3/4. I bought more at 1 7/8. I bought more at 1 1/2. I bought more at 1 1/4. I bought more at 7/8. And then I watched it go down to practically zero. I had no regard for money management at all, zero. And with that, I decided that what's really important, okay, is the ability to recognize that I had no discipline in the market. So the difference between averaging down is you have no stops in the market. You have no regard for your money, up and or down. When I call an idea on a strategy, like today, for example, I said, look to short the S&Ps 21, 21.5 to 31.5, right? So let's say you sold some at 21, you sold some at 23, you sold some at 25, right? Now your average price is 23. So you're scaling in. And then you have a stop order in above the 31.5 level. So let's say it ran and you got filled 4 or 5 times, you have to put a stop order in at 33, 34, for example. But let's just say in the example I just gave you, the S&Ps on the 830 bar this morning, okay, got up to the 24.5. So let's just say you sold 21s, 21, 22.5s, and 24s, right? Okay, so now you're short 3 contracts. Now all of a sudden you put your stop in, right? And just in case you get news comes out, and if it goes higher, you want to sell more, right? You scale into the position. Scaling in is constantly adding, right, in the range of the strategy, because you should, my personal opinion, it's very difficult to do single lots. What's a single lot? Just doing one price. So one S&P contract at 21, the last sale is 24. I mean, you can't. That means you got to wait till it drops at least 3 points just to break even, right? If it goes to 20 and a half, you make $50 on that. After commissions, you're lucky, you make $40. So what people do is, I don't know their account sizes, so people like to scale into a position up and or down. Okay, now with that, what's really important, okay, is as the trade is working, excuse me, working, and let's say you sold, like I said, 21s, 22 and a halves, and 24s, your average price is 22 and a half. Now it drops. Let's say it drops down to 21, which it did, and you cover one. You just look to buy one back because you're short, you're looking to cover, but you're still short too. You bring your stop down to 22 and a half. It trades down to 19. You can cover one and now bring your stop down to 20 and a half. It trades down to 17. You could look to cover, or you just lower your stop, just say like 19, 18 and a half. So on this trade this morning, right, we saw the S&P futures trade all the way down from the 24 and a half all the way down. So they dropped 12 points before they turned back up a little bit. So the importance of scaling in, and again, your hand is on the mouse. That's right. You do not leave your hand like you're going to smoke a cigarette, like you're going to run around the corner and go to, get a soda or something. When you have a position and you're day trading and we're teaching the strategies, right? Guess what? You need to be proficient in placing orders on the ladder, on the price ladder. That's why you paper trade, and then you go from paper trading, in my opinion, you go to micros, from micros into the big futures contracts. So with that being said, so it's important because I don't know everybody's account size. So I give a range. I'll say, okay, I would be looking to short S&Ps here. So if you have $1,000 in your account, you may say, okay, I can only do 2 contracts if it's $500 margin, or I can do, 10 micros because that's 500, keep some money in the account. So I'll sell 1 here, I'll sell 3 here, and I'll sell 4 here, or whatever. And it never got up after the 3rd entry, and then it drops. So there is more than one way to trade the market, especially if you have a small account. If you have big accounts, well, everybody's different. That's why I give a range. I can't take the time to, investigate every single one of people's accounts. So I give a range, and I scale in and I scale out. I'm telling you, this has helped people immensely. A couple people last week said, I'm short the S&Ps at 47. Last sale's 51. Okay, then it dropped down to 40. He said, I just made 7 points. I'm like, great, but I can't tell you what to do. But I don't think it's prudent to trade a single lot entry. I can't teach that. That's like being too perfect. With the volatility, that means you got the crystal ball. You knew that 51 was going to be the high. No way. Maybe you sold 47s, you sold 49s, you sold 51s. And maybe as it's trading higher, you add a little bit more to the position to bring your average cost up more. So anyway, scaling in and scaling out is a term that I constantly use in my live channel each and every day. So if you have any questions, you can text me, you can ask in the Discord, but this is a prudent way, in my opinion. Some people like to scale in 3 times, some people like to scale in 4 times, some people like to scale in 5 times. Some people like to scale in with single lot, one lot. Some like to do 1 lot on the first, 2 on the second, 3 on the third on the contract size. Everybody's different, but I'm giving you the ability to, first of all, the foremost is to understand the strategy, and then we can go from there. Okay. All right. Okay. So this person watched the S&P futures go up 400 points with no stop order. I tried to be the best person I could. I tried to say, okay, what can you do? I said, I can't give you investment advice. I said, if it was me and you're adamant the market's going down, and you could tolerate this loss, I would open up a separate account, and I would then look to day trade. If you're down 25, 28,000, you've been averaging about $800 to $1,500 a day. So in theory, 20 some more business days, you'll be flat. If you can trade, make the $800 to $1,500 a day. And guess what? That person did that, but then got very, very lucky. And the S&P futures dropped from the 4630 down to the 4250, covered. Okay, lost about $1,150 on that one position that was down 27 or 28,000. But then that person also traded intraday, made a lot of money during that period, now kept that money, but every time that person put the order in, that person applied a stop. You cannot trade the market without stop orders. You can't do it. If you bought something here at 79, it's now 77, you buy more, 75, you buy more. And you say, okay, CV stop is 70, I'm going to be there. Now it starts trading up. Or let's say you get stopped out at 70. Okay, because 70, they could go to 50. Let's say news comes out. I'll tell you a great story. One time, I think I was long, if I remember correctly, a couple, I don't know if it was 100, 150 S&P futures. I forgot it was 80 or 150. I forgot what it was. And I was up like four points on it. So let's just say, argument say I was up on 100 lot, for example, $20,000, right? And it was touching. And I was about to get out, and I had my stop order in, and then right down. I got stopped out. My $20,000 profit turned out to be like a $15,000 loss. Oh, it was about $15,000 loss. Because the earnings for Google got released during the day instead of the end of the day. So news can affect, that's why you need to have the stop orders in. And money management and risk management is everything. And this is exactly why I'm saying this, okay, in this example, okay, that let's say, for example, today, right, I say, okay, if the spiders take out this number, or if the S&Ps take out this number, you put a buy stop, whether it's a buy stop market, which means the minute it touches, it becomes a market order. I don't like to do that. Or you put a buy limit order in. Now, this doesn't mean you're going to get filled, because it could be a fast market and it go right up. And, you know, where a market order, you would have got filled, but a buy limit becomes a bid if it just explodes to the upside. So you got orders like, you know, first in, first out. You know, you want to be able, you know, there's so many ways, but I don't want to complicate that right now, okay? But it's important, plain and simple, you must use stop orders. Hey, you have a car, right? You have a brake, you have a green light, it goes from green to yellow to red. What do? You hit step on the gas, or you hit the brake. That's your stop, right? There's no difference, okay? And nobody is bigger than the market, no one. No one, okay, no one. It's really important that the individual does the research to apply and pick the right broker. Number one, the broker, in my opinion, what they pretty much all do, have the ladder system, which was the first slide. Then you have Ninja Trader, you have Optimus Futures, TD Ameritrade, TradeStation, Interactive Broker, TradeEZ, right? You have GFF Futures in here as well. Now, I mean, I can go on and on and on. But, for example, some of these firms have what's called low margin, and some of these firms have high margin, especially in extreme volatility. They can raise the margin overnight. That means, like, for example, if you have $5,000 in your account and they raise it on the margin, some of these firms, let's say Optimus and GFF, on, let's say, $500 margin if you buy one contract. So if you buy 4 contracts, you're using up $2,000 of your $5,000 in your account for margin. But some of these firms have $2,000 and $3,000, and some firms go to $10,000, $12,000. That means you have to have $50,000 in your account to trade 4 contracts. So do your due diligence, find out you know, based upon the amount of money you have. I can't tell you who to use. I could just say, hey, these firms are good. Okay, I like these firms. Do your research, see what the margin requirements are, and then go from there, right? Because then, like, you may say, Mr. Kalayjian, you know, I only have $2,000 and I want to trade the micro E-minis, but I'm just giving an example. Let's say TradeStation charges you $200 margin, but let's say GFF and Optimus charge $50 for margin. Well, then what's better? What's better suited for you, right? Okay, so it's very important that you do your homework. And our Discord community, everybody's talking and everybody's helping each other in that Discord, okay? Okay, so now we're gonna start. We got the broker down, we got our simulator down, okay? You gotta understand, you're not jumping in trading futures, okay? You're not doing that, okay? You're not gonna do that. You're gonna take your time. As my father would say, Rome wasn't built in a day. And you're gonna be able to look at the pros and the cons of trading. You wanna be able to look at the capital conservation. You have to have no emotion. You have to build your confidence and your experience. You want to start seeing how you're identifying what I'm teaching you and build a track record. You want to see your mistakes that you made. And again, trading with the software that I developed to gain the confidence. Okay. The negatives. Well, you never actually, but you know what? When you got on the bicycle for the first time, my son wanted to ride his bike. For the first time, it took me 95 times to go up and down the driveway. I had a broken back, but finally let go and he did it. You got to get the experience on a simulator. It's called paper trading or simulate trade. There's no capital risk, right? At all, period. Right? The account doesn't have any liquidity factors and there's no commission. So you're just practicing. And that's the proper thing to do when you're, and listen, some people get it in a week. Some people take months. But it's okay. It's okay. Okay. So a lot of people, after you go from paper trading, you then go into the micros, right? The mini contract. Very rare do I see people go from the paper trading to the big contract, the E-mini future, right? If I'm talking S&Ps here now, right? So basically, let's say, for example, you do 3 micros, okay, 3 micros right here, right? It's $1.25. So if I bought 3 micros and my average price was 0.5 and they went to 0.6, I just made $15, excluding commissions. The purpose of, and I actually was sitting in the CME with the CME chairman in Chicago when he was coming out with this product. And he said, Stevie, the reason I built this product, the micros, is because I want everybody off simulator. Once they go from simulator, they go into the micros. The micros, hopefully they're good enough to trade the big futures contracts, right? So, you know, all I can say is that there's steps. Paper trading to micros, like a guy said to me today, I think I'm ready to trade the big contracts. I'm like, hey, go for it. If you think you're ready and you apply everything that you've done now remember, paper trading is a lot different than real. Okay, it's real money now. So you went from the minor leagues to the major leagues, right? So when you're trading an E-mini future, the big one, if you bought 3 contracts and you went up 1 point or 1 handle equals 1 point, you just made $150. Wow, Stevie, that sounds great. Time out. I'm giving you an example here. These things, I told you, it's like facing, you know, a pitcher throwing 100. You better be ready. It may take time to be ready, but you'll be ready. You got to practice. You got to look at, imagine you're staring at the chart, you're staring, and then you got to look to your left and click, 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 and put the orders in. Now you own them. And then, so you know, it's rallying, you want to go click, 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 and you got to raise your stop. Listen, it takes time. But I'm just teaching you the sequence here of paper to micro, from micro to standard lot, to the mini contract, right? Okay. So the point here, okay, is that trading the market and understanding the steps here are crucial, okay? And that's for the purpose of me putting together this webinar, so everybody has this. Now, before I get into, let me see what the next slide is. Okay, so before I get into the next series, which is very advanced, there are 4 steps into my live channel that I want everybody to understand. First step, all the numbers, all my indicators, 1, 2, 3, 4. You gotta need to understand my indicators, right? You need to understand what indicator 1, 2, 3, 4 are. 75% of the time I use 3 of the 4 indicators. 25% of the time I use all 4. Okay? There are numbers to the right. I look at only 4 of them. Number 3, my terminology, right? And I have my terminology sheet right here. It's on my website. Okay, look to cover, go flat. Look to short scalp or short. Look to scalp short. Look to buy scalp. Buy divergences, sell divergences, overbought, oversold, a MACD, a buying pressure, predictive analytics. Okay, moving average, double blues, double blues, double reds, double reds. Correlation, which I'm going to show you. A disconnect, new highs, new lows, higher low, lower highs, positive divergence, negative divergence, up and ins, down and ups, the pivot line, a bounce, and a pullback. These terms are used so much during the day, you're going to hate my voice. But guess what? I don't deviate. Every single day, it's the same thing. It's the same thing. So I'm not going to, you're not going to walk in when they say, you know, I haven't heard that term before. What's Steve talking about now? He's already talking Chinese since I'm, you know, pretty much like, you know, I'm like, you know, I'm not understanding. It's like if I went to a foreign country, I don't know. Like I went to Italy once, I didn't understand what they were telling me in Florence. You know, I had to get to ask somebody, right? But guess what? You know, if I went to China, I wouldn't understand what somebody was, unless I, right? If somebody's from China comes to the United States and they don't know the English language. Well, it takes time. It takes time to fully understand the terminology, right? And the 4th thing is understanding the strategies, right? We focus on trends. We focus on reversals. Today, we had a monster buy reversal in the market. It means we were down all day, and then we got the big buy around 12:30. And then we talk about divergences, buy divergences and sell divergences, right? So all I'm saying is that these sequences, the indicate or the indicators 1, 2, 3, 4, all the numbers to the right, and I teach this all day long, right? The terminology and then the strategies. And I actually in the Discord, it's amazing. I mean, I love it. Hey, Stephen, you just got a double blue buy on gold. Yes, we're looking to buy the first pullback. So there's everything I just said on those sheets. If you trust yourself to do the work, you will get this. You will get this, okay? You will get this, okay? You will get this, okay? All right. So I'm going to show you what's called a correlation right now, all right? So I'm looking at the S&P futures, and by the way, I look at, when you trade the indexes, I would prefer you look at, in this case, we use multiple time frames. That's why you have 2 charts on one screen. I look at the 5 and the 15, right? And then I also have a separate chart for the 3-minute, which in my opinion is one of the most powerful time frames. And then I also look at the bigger time frames like the 30 and the hourly. So if you're looking at the market, the S&P futures trade over close to 24 hours in a day. And the underlying ETF, which I'm going to show you next, trades 6.5 hours in a day in a stock, like trades like a stock. But I only prefer to click on the New York markets. I don't look to trade the markets in a way that gives you the pre-market data. So here in this example, I have what's called a MACD positive right here on indicator 1, which is in the notes I just read. Indicator 4 is my own predictive analytics. So I got the buy signal right here, meaning the algorithm went from orange over blue to blue over orange. So this is called a correlation or a double blue, right? But let's just stick to the word correlation. And I'll show you this strategy here. And this actually happened a couple of days ago. I wanted to keep it fresh. And there were so many that happened today but this was just, we worked on this the last couple of days. So the 15-minute time frame actually got the buy signal, and already the 5-minute time frame was bullish. Okay, so whenever you get the MACD positive, and this is my 0.0 line, it's called my pivot line. So whenever the MACDs are crossing up from below the pivot, the 15 correlated with the 5. Okay, we use the smaller time frame, like the 5-minute time frame, or the 3, but in this case the 5, to look for the pullback, which I just mentioned on that sheet. And we got the pullback on the oversold condition, again, right on the sheet. And then bam, the low was 42.45.5. We were like somewhere, we gave the range 38.5 to 48.5. It dropped 3 off that high. I saw the deep oversold. I knew the market was going to turn up big, and did it ever? It traded up in 5, 10, 15, 20, 25, 30, 35, 40 minutes. It traded up around the 80. So it ran 35 points. Now these trades last anywhere from 1 bar to 8 bars, meaning on a 5-minute, 1 minute to 40 minutes. And in this case, you could have gotten out and you could have just keep raising your stop. If you had bought, let's say, for example, 48.5s and 46.5s, and let's say it goes to 52, you kick one out, you raise your stop to 50.5, it goes to 55.5, just, I'm going to keep raising my stop, I'll go 53.5, I'm going to go, or I sell it and I'm out, okay? But only gave you probably, if you're looking, let's say maybe give you 2 or possibly 3 entries on, on that range that I gave. Remember I said, scaling in early in the slides. But watch what happens here now, okay? Oops. Now watch what happens here now, okay? The spiders went bullish here. So let's go back to the S&P futures really. So the S&P futures went positive, bullish at around 115. But the underlying ETF, the spiders, went positive around 215, like an hour later. So now this is called a double blue. That's it. They're going up, right? Because now the underlying ETF correlated with the futures contract an hour later. This pullback right here is like, holy cow, this is it. And these patterns repeat themselves each and every day, okay? So the point here is that we're able, okay, to identify this and teach this based upon the 9 years of me doing this research and building these analytics, building these algorithms, building everything. Somebody's like, oh yeah, MACD, but really? Can you use the MACD independently? No, I say no. Somebody's like, yeah, I do MACD. Really? I'll show you strategies using the way I have this set up that will, in my opinion, will blow your mind. With the MACDs crossing up from below my pivot, 90, I think the odds are 93, 94%. You're going to, on this pullback, you're going to make a new high. So here's my pivot line. The spiders correlated not only with its 5-minute time frame on the bullish, right, but it also correlated with the underlying S&P futures, right? So this is an amazing strategy. Now here's the cues. The NASDAQ you can see here, the Qs went bullish here at 230, okay? This is a strategy, okay, where the Qs now correlated with its 5-minute time frame. And then we got what's called a bullish divergence, because the Qs correlated with the NASDAQ futures already. But when we got that same pullback, okay, off the S&Ps and on the ETF spiders, right, you can see the significant oversold condition. Even though the algorithm went negative, you trade that against the 15-minute time frame because of the big push up on the NASDAQ that day. So when it pulled in, the algorithm flipped negative. Whereas in this example here on the spiders, you can see that we did not get that oversold where the algorithm went negative. So everything lined up exactly at 305 that day. The spiders, the Qs, the S&P futures, the NASDAQ, the Dow, the Russell, everything correlated, and we got that monster push down, right? Beautiful, beautiful long strategy, okay? And this is what we teach each and every day in our live channel. You can get the videos of this. You can see these patterns. You can see these strategies constantly repeat themselves. Again, what I teach here each and every day is all based upon visualization, okay, and repetition. The last part of this is you need the right technology, right? You need the right technology. And I basically have built my world right here that I have on the various different platforms. TradeEZ, Ninja Trader, TradeStation, TradingView, and Sigma 360. For those of you who want to trade stocks, futures, Jesus, it's been a long day. So those of you who want to trade futures, okay, you can get this right here and upload this, my software that I teach each and every day in this from 9 to 4 in this live channel at TradeEZ. You could get this on any one of these platforms. Now, if you're a TradeStation customer and you don't want to pay the TradeStation margin, you could just come to my site, open up an account at TradeStation, just fund it, and then you can just open up an account, and then we'll get the ID and you can get the software. Ninja Trader, go fund an account. You could use Ninja. Sigma 360, go fund an account. You get the software. It's $10 a month. TradingView is a technology company. You could trade anywhere in the world. You could trade at Ninja. You could trade at GFF. You could trade at Optimus. You could trade at Schwab, E-Trade, TD Ameritrade, right? Thinkorswim. And you just get the technology at TradingView. TradeStation, if you want to put the money in TradeStation and trade futures, right? With the higher margin, no problem. Okay, now, then you get the charts. And we'll be able, so I'm giving people the ability to have multi ways of using my software on different firms. So what's really important about this whole approach is, number one, if you do like futures and you want to learn more, I offer a 3-day free trial. You come into my Discord, it's free. If you come in, you can ask questions. You hear me 9 to 4, and you're going to learn. And you're going to hear exactly the same thing. You're going to be sick of my voice. And I'm going to tell you, people are just eating it up because they know that I'm not going to deviate. I got newbies calling out ideas. And I was like, no, not yet. On the right approach, almost. You got to wait a little bit more, okay? And so, but it's great because the community is growing and people are learning. And that's why I believe in what I'm doing here with the great team that we have at TradeEZ. But the most important thing is futures are also a way that you can trade the market without having that massive overhanging. I don't have, Mr. Kalayjian, I'm a student. I don't have $25,000. but I want to learn how to trade. I don't have the money to trade, but I want to learn. I'll practice. I'll go on a simulator. Futures, FX, right? Futures, because there's no $25,000. And options, I don't really think are, in my opinion, are a way right now, especially if you're a newbie, unless you want to, buy and hold or whatever. But here nor there, it's really about one thing. Don't be fearful of trading futures. Okay. Do they move? Yes. You have to know what you're doing. Absolutely. Right. But you'll get there. You'll get there. And I always tell people, be proactive, ask questions, come into the community. I can't even tell you, before I even say it, I got people helping answering the question. It's really remarkable. And I'm so proud of what we've built here and we broadcast around the world. I mean, I was on the phone with Pakistan this morning. I was on the phone with Egypt yesterday, right? I'm on the phone with the Middle East. I'm on the phone with people in California. It doesn't make a difference. You could trade futures even during the Tokyo or European session at night if you're familiar with the software. And obviously you have to do your due diligence in the Tokyo or European sessions that there's no big economic numbers going to come out, because you do not want to trade in front of a news event, right? So if you're going to learn futures and you want to paper trade, go to like a site like Yahoo or Forex.com, and you get all the economic data for each and every market. So with that, for me, trading futures is a great way to learn. It's like, when I wanted to ride a motorcycle one time, somebody said to me, "CV, go get a Honda, go get a Suzuki." I said, "Nah, I'm gonna go get a Harley." I go, "What are you, crazy? I'm gonna get a Harley." I bought a Harley. I wanted to learn on the best. I never rode a motorcycle in my life. 1,300 cc's, I'm riding down a highway, doing 70, and I never rode a motorcycle in my life, but I did. I taught myself, right, to ride it. And when my son was born, I sold it like a couple of years later, right? But the point of the matter is, what we teach each and every day is very at a high level, but a high level that you're going to understand. Now, other mentors coming on to TradeEZ may suit you better. We're talking to a couple of people right now to come on, but TradeEZ is going to be a platform designed for as many DNAs that I can potentially cover. Okay. So with that, I want to say thank you for giving me this chance. And, any questions, you just come into my live channel. And, I usually give out my phone number to everybody where people can contact me, 914-500-7484. I eventually get back to everybody. You can text me. If it's international, use WhatsApp. Do me that favor. But the most important thing is ask questions, learn, and don't be fearful of trading futures, because for me, I think that the demand that I had, and this ad came out of nowhere. I just couldn't handle the calls. I'm like, I need to learn. I'm like, okay. I said to my team, I got to do a webinar for futures, because this is really, people want to learn. And I hope I covered a lot, and there's still a little bit more, well, there's always more to learn, right? But when you come in each and every day, and then there's no greater gift at the end of all this hard work, somebody saying, "You changed my life. I learned. I really got this down now. Thank you. I was so fearful in my life. Nobody explained it the way you did." I'm not trying to pat myself on the back or anything, but these are the comments. And then I see the net results. My phone blows up at the end of the day with people sending me what they made on the day. Now, I'm not telling you that there's every single day is a great day. Okay, there are days that, we get, based upon a news event or something, and, we take it on the chin, but I'm not painting a rosy picture. Oh, he's never talking about it. Well, today I had 3, I said scalp shorts, and those are for the, mostly when I say scalp shorts, it's not for the beginner, it's for the professional guys, right? More advanced traders that know how to trade that with me and be able to, but then on the next 2 shorts after that, we got them. And then the 3 or 4 longs that we got them. So we end up going back. One time there was somebody in the room said he was doing phenomenal and he had a really bad day. And I said, "Can I ask you a quick question?" I said, you want to stop it now, or do you really want me to really help you get out of this? Because 4 of those trades you did on your own, and the other 2, they were a little profitable, but he said, you know what, I'm going to stick with you. And at the end of the day, he went into the green by $50, right? And he was trading NASDAQ futures, okay? So with that, I want to say, welcome to TradeEZ. I would love to have you join my Discord. I would love to have you come into my 3-day free trial. And if you like what you see, I have different plans for people. If you ask, you need questions, Mr. Kalayjian, actually call me Steve. Hey, I'm just starting out. I don't have a lot of money. Of the list of brokers, you know anybody good? Yeah, and I'll say, listen, I really can't tell you, but if it was me, I would look at GFF, Optimus, if you have, and do they all have this, the ladder? I believe they do, because you can't type orders in a market like that. So with that, everybody, I want to say, you know, thank you for giving me this chance. And I will hopefully hear from all of you, and I hope you come in and learn and practice. Before I go, over the weekend, I saw a video of Tiger Woods. And Tiger Woods said, nothing in life was given to him. And he had to earn it. And that's the same thing. I grew up with nothing, absolutely nothing. I had to earn it. But if you don't apply the work and the skill and and asking the questions, you don't deserve to be successful then. There's no easy way out. Come in, listen. I'm not saying you have to come from 9 to 4. You have different lives, but I have people coming in and out all day long, 6, 7, 8 times a day. And they're asking questions, or they're seeing things, and they're practicing. I'm seeing people actually do the work. But am I confident that based upon my skill set of the software and the skill set of teaching, you're going to do it? I believe you'll be successful. Okay? All right. Good night, everybody. Thank you for giving me this opportunity, and I hope to hear from all of you soon. Okay? Thank you.